So I'm recording this meeting. Okay. So nothing very elaborate. Please tell me if my voice is audible, and feel free to interject me if you have a point. I thought we will just quickly run through the Nifty and the Bank Nifty chart. Maybe if there is some time, we can look at some of the other sector chart. And wanted to talk about very basic stuff, which many times we ignore, because we end up trying to anticipate the market ahead of the market moves. So that is the purpose. So I thought, let's look at three things. The basic candle. I'm not going to talk about complex 2-candle or 3-candle structure. I'm going to talk a very basic thing on the candle, and how following that very basic thing, we can look at the trend or the trend reversal that is happening. The second is, of course, the trend lines or the channels, right? Without any indicators. So today, I wanted to basically focus only on the price action, because we all may be knowing various indicators and maybe using that. But as we all know, that most of those indicators are lagging indicator rather than leading indicator. So by the time we catch them, many times things are already delayed. Trend has already reversed. So we miss a good part. Nothing wrong in that. I mean, that always helps to have certain discipline. But I thought, let's focus on price action this time and see what we do. So the first one, candles patterns. The second, not just the pattern, just the candle. We'll look at a single candle and how we can make sense out of that. Second one is the trend lines and the channels. And the third one is the gaps, because all of us know about the gaps, and let's see that how the gaps act as the support and the resistance, and how they play very important role. So that's pretty much the agenda. And I'm going to share my chart on the trading view. So let me share my screen. I'll share my whole screen just to make it simpler. Okay, great. I hope you are able to see my screen. Let me minimize that. Are you guys able to see my screen? The trading view?
Dheeraj. Yeah, we can see the screen. Okay. Yes.
So let me start with the Nifty, and let me start with the monthly chart, right? Because we all know that if our time horizon is bigger, we look at the monthly. If we are investors, we want to see what's happening to our portfolio, which direction the market is going, and then we drill it down, right? We can get to weekly, then daily if you're a swing or a positional trader, and if you're an intraday trader, then you get down to hourly, 15 minutes, and even 5 minutes chart, right? So let's look at what's happening, and just to clear some of those concepts that I want to talk about. So if you look at it, this is March candle. We all know that the COVID scare and what happened. And after that, if April, right? We started green candle, right? Now it's not just about green candle. I wanted to talk about two things. If we are catching a trend, and if we have to catch an uptrend, then if you can put Mr. Ramakrishna, if you can put it, please. If you're not speaking, just please put yourself on mute. Mr. Radhakrishna, can you put yourself on mute? Yeah. Thanks. Okay.
Dheeraj, is it possible for you to mute everyone for a second?
Just trying to see. Okay. Sorry. Please unmute when you have to speak, otherwise. Okay. So the point I was trying to make it, and I will make it more clear once we get into the daily candle and the weekly candle. Okay. If you look at here, I just want to show you one thing, right? Look at the candles from June onwards. Okay. So what do you see in the June candle? You look at the high of June candle is higher than the high of May candle. Yes. So higher is higher than the previous month candle. The low of June candle is higher than the low of May candle. So it is higher high, higher low. And the close of June candle is higher then the high of May candle. So three conditions when we are talking about an uptrend. Okay. Three conditions we are talking about when we are talking about the uptrend. The high of that candle has to be higher than the previous candle. The low of the candle has to be higher than the low of the previous candle. And the close of that candle has to be higher than the high of the previous candle. The third part, please, we all know higher high, higher low structure. So that I think all of us know. But the third point which I'm making, please note that down, that the close of the candle has to be higher than the high of the previous candle if we are trying to catch an uptrend. Okay. So you look at this candle in June. This is when the trend was confirmed. So if you look at the April candle, whatever three rules that I talked about, it did not meet that criteria. Here, the high was not higher than the March candle. Okay, so that condition itself failed. If I look at the next candle, which is the May candle, again, the high was not higher than the April candle. So we cannot confirm the reversal. I mean, it was a green candle, but we cannot say that the trend has reversed. But when we look at the June candle high was higher than the May candle high, the low was higher than the low of the May candle high, and the close was higher than the high of the May candle. This is where the trend reversed. Now you look at the next candle in July. That again meets the criteria which I talked about. The high, again, I don't want to repeat too many times, but high of July was higher than the high of June, low was higher than the low of June, and the close was higher than the high of June. So we continued in the uptrend. You look at the August candle, okay? Same three conditions getting met. So for the in between, of course, there would be trend where it would have gone up, down. But if you are a longer term investor, you're looking at a monthly chart, very clearly, you said at the end of June, the trend has reversed. You get into the long position in July 1st. You continue for whole of July, the condition is not violated. You continue whole of August, the condition is not violated. 2 months, if you just look at it, open was 10,323 of July, right? And the August close was 11,387, right? So it was about 1,500 point move that you catch uninterrupted, okay? Now let's look at the next candle, okay? September candle. Now September candle is not meeting the three criteria which we are talking about. High was higher than, high was not higher than the high of the previous candle. Low was not higher than the low. Close, but it still did not close below the August low, right? So if now we are in the uptrend, now if we have to catch the downtrend, then the three conditions that I talked about has to be opposite of the three conditions in the uptrend. So in that downtrend, the high has to be lower than the previous high, low has to be lower than the previous low, and the close has to be lower than the previous low. I wish I could write it down, but maybe I'll put it on the WhatsApp. I hope that is clear, right? So when we are now saying, I got into here, I got into 1st of July. Now I'm saying I will continue till the trend reverses. I will continue in the uptrend unless I get a confirmation that trend has reversed. When will I get a confirmation that the trend has reversed? When all the three conditions on trend reversal are met, right? That did not meet in September. That did not meet in October, right? Again, you see this is on an uptrend, right? October, it came back and met all the criteria for the uptrend, right? Higher is higher than the September, lower is higher than the low of September, close is higher than the high of, no, close was not higher, but two conditions were met, right? Okay. So while this did not meet the uptrend confirmation, it was still not meeting the downtrend confirmation. And then we came to November, again, met all the three criteria of uptrend. December met all the three criteria of uptrend. January did not meet all the three criteria, but is not meeting the criteria of downtrend, right? So when did we get that situation, which I'm talking about, when we said, so from, July onwards till October 2021, right? More than 1 year, we did not on a monthly time frame get a trend reversal. All the three conditions that I'm talking about for the trend reversal was not met on a monthly time frame. So, you can reduce your long positions here on some of these candles, which did not meet the bullish condition, but you will still not go short. And this again, I'm talking about, this is the monthly time frame. So this is for the long-term investor. This is not for the intraday or the weekly traders, right? When did we meet that criteria? November. Look at the November candle. November candle high is lower than the high of October. I'm talking about November 2021. November candle low is lower than the October candle low. November candle close is lower than the low of October candle. This is where the trend reversed. This is where the trend reversed. Okay. November, the trend reversed. Okay. Now you will see certain candles, that all the three criteria that I'm talking about is not meeting, but we have not got a reversal. We have not got where the high is higher than the previous high, low is higher than the previous high or closer. So that condition when we are getting in July candle. Now you look at the July candle. None of them from November onwards met that criteria. Now see what is happening in July. July high is higher than the June high. July low is higher than the June low. July close is higher than the high of June. Are we meeting all the three criteria? We are, right? We are meeting all the three criteria in July. The trend has reversed. It does not mean that it will continue, but the trend has reversed this month on a monthly time frame. On the July close, the trend has reversed. What we saw here in July 2020, we are witnessing in July 2022. From the bearish, it has turned bullish on a monthly time frame. Any questions here? Feel free to talk it out, right? But I hope this is clear, right? I mean, I'm just giving you a simple, very, very simple. I'm not talking about any complex pattern. I'm not talking about the wave theory. I'm not talking about any of that. I'm just talking about, you're just looking at one candle and you are just looking at this candle closed higher than the previous high, higher than the previous low is higher than the previous low, close is higher than the previous high if it is an uptrend, and the reverse if it is a downtrend. That's all we are looking at it. We are just looking at one candle and comparing it with the previous candle. Okay.
Yeah, Dheeraj, Sujit here. I understand from the post-COVID rally from a perspective, and there is a huge dip at the COVID time, right? So that would have had an impact on the market. Does this higher highs and higher lows, all the three conditions which we talked, does it work like pre-COVID as well?
Yeah,
did we do
you see any of the candle? You see here, January 17.
Okay.
Right. So I'm showing you now January 17. You look at January 17 trend reversed. Feb continued, March continued, April continued. When did it reverse? From January 17, right? It reversed in March 18.
Okay. Okay.
So this works. Like go back whenever, go back 10 years, 15 years, whatever you want to do. I mean, it does not mean that next month, see, this month trend has reversed. Can it reverse again if it is a very volatile market in August? Possible. But now here you are not aggressively short. Even if you're not going aggressive long, if you're a long-term investor, right, you will not go aggressive aggressive short is what I'm saying. So this is a warning thing for you. I will cut down my short. I'm a long, and again, I'm talking about monthly time frame, right? I will cut down my short. So now let me, so this is an important thing, please keep in mind that this month on a monthly time frame, Nifty trend has reversed. Okay. Can it reverse again? Yes, it can.
No,
But
I understand that. This
right?
perfectly fine. I think it makes sense. Yeah.
So this is the monthly time frame. Now let me go down to the weekly time frame. Okay. Now again, the similar things will apply. Okay. The similar things will apply. I'm not going to repeat the concept. Now let me introduce the concept of the trend line, right? Which all of you probably or most of you are familiar. But let me still look at just look at this. Just look at this. What is happening here? If I just look at a simple, zigzag, right? From here, we came here, right? Then, if I just draw that, right? Did we break the, this was the swing low, right? This swing high is lower than the swing high. And, I can draw that, but for the, sake of time, if I draw this like this, a zigzag, right? We are still on a swing high and a low perspective on a weekly time frame. What is clear? We are in a downward slope. Is that clear? Can you guys see from here?
Yeah. I can see it, but yeah.
We are in a downward slope. Okay. So if I just draw a different kind of trend line, right? And in a trend line, just keep in mind that minimum we need to connect two candles. More number of points we connect, stronger the trend line is, right? But minimum you need to connect 2 points. Okay, that is the minimum requirement wherever you're drawing the trend line, right? So let me just connect this, right? Okay. Now you see this. I was able to connect this high, this high, this high here, correct? So I'm able to connect. Now, as long as this trend line is intact, on a weekly time frame, Nifty is still on a downtrend. Is that clear? Based on the trend line, Nifty is still on a downtrend. However, the candle thing which I talked about, right? The candle thing which I talked about, 4th of July is when Nifty turned from a downtrend. So you look at this, call it a primary trend. On a weekly chart, the primary trend is downward. Okay, the primary trend is still downward. However, the secondary trend, you look at the secondary trend, you look at the candle 4th July that started forming. 4th July candle met all the three conditions that I talked about. High is higher than the previous high, low is higher than the previous low, and close is higher than the previous high. So we became bullish on a secondary time frame on the close of 4th of July, and we continue even this week close. You look at 25th July week, like whatever ended on Friday. Again, all the three conditions are being met here. So our secondary trend on weekly time frame on Nifty is bullish. Okay, our primary trend is still bearish. So if you are a real long term, so where will it turn bullish? Where will it turn bullish? When this trend line breaks. If it breaks after 1 week, then it has to be 17,780 approximately, right? If it is breaking in 18th August, 750. So somewhere around 17,750, 17,770. If Nifty gives you a weekly close above that, okay, it has to close. It is not like it goes above and then comes down in the same week. On a Friday close, if Nifty is breaking this trend line, then we can say that even the primary trend has turned now bullish. But right now, primary trend is bearish, secondary trend is bullish. So now if you are trading on, let's say, monthly time frame, you want to hold things for a month, okay, or you are trading in monthly expiry options in the futures, you will not aggressively short right now till you see this structure at least pausing, if not breaking. This structure has to at least pause. Next week could be the pause candle, but you will, unless you get a confirmation, so where did we get the confirmation? Look at, very beautiful, right? 7th March, we formed a, just 1 second, let me allow everyone. Okay. sorry, see 7th March, we formed a green candle, but it was not a confirmation. Okay. However, the 14th March candle was a confirmation that the secondary trend has changed, and that confirmation broke, right, on 11th April candle. So even if I would have entered on 21st March, I would have entered long. I would have entered at 17,329 and I would have exited at 17,740. You would have captured 400 points. This is a huge, particularly if you are taking a future position. On 400 points, you can make almost 20% money if you are taking the full margin. That's a separate discussion, but you are catching 400 points. Now, after you catch that, this is where, it formed a candle, which was indecision candle. And the next candle gave you the confirmation on the trend reversal. So 11th April candle, all of you, I hope, are able to see it, right? So it was not able to break the trend line because, I could have drawn the same trend line, catching the 2 points here. It just, you see how beautifully it has stopped there at the trend line, as if, it was waiting to hit the trend line and reverse. Just look at this. I'm catching the top of this candle, which was a swing high on 18th October week. I'm joining it with the high of 17 Jan swing high. And this high structure that got formed in April exactly took the resistance from there and reversed. It took the reversal. Am I saying that it will take the reverse resistance here? Possible. We will have to watch that out, right? It's very possible that it may go all the way to 17,800 next week, or week after that, maybe 17,700 and take a reversal. It's very much possible. I mean, in market, no one can predict for sure, but it is very, 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 very much possible. But here we are on a secondary trend on a bullish structure. We will not go aggressive short. I mean, tactical short you can do on a smaller time frame, but we will not go aggressive short unless we get a confirmation on the reversal. Okay, just to illustrate my point, we got the confirmation on 11th April. And if we caught that reversal, the trend changed only here on 30th of May. 30th of May, it changed. You would have still caught. And after 30th May, next week itself, it reversed. Okay, so this you are saying, of course, I mean, I don't want to get into too much of the candle type. I mean, if you see, these are called the pin bar candle, which kind of indicate a reversal, but even after that, the week after that is, this candle, right? This is the pin bar where you say that it went to this high, but could not sustain the high. And it pretty much ended towards the low of that candle. And that was a sign that, it may reverse, and it reversed. Okay. So this is where we are on the Nifty weekly time frame. Any questions before I proceed? I think, if my Zoom comes off, then I will have to join back the same. It's very much possible. Okay, let me quickly do a daily analysis. Okay, now you see the daily analysis, right? Let me zoom in. Okay. Can you see this chart here? Okay. On a daily time frame, again, the trend is low. And it is almost at the same level, which we talked about, 17,750, where it can hit the resistance and it may reverse from there. Whether it will or not, we don't know, right? Nifty has been forming higher high, higher low structure, right? I mean, if I just make it a channel, then you will understand, if I just make it a parallel channel. Something like this, okay? We are above the midline of this channel, and we may hit it, and then we may start coming back. But this is where there was an intermediate high, so we broke that intermediate high, and we are higher than that. Okay. In the interest of time, let me talk about one or two more concepts very quickly, and then we can wrap up today. You can do the same thing on the Bank Nifty. Sorry for that. So there are a few other concepts, right? I mean, I talked about the candle, I talked about the trend line, and how we are on a longer term time frame, still on a downward trend, but on a medium or whatever, on the secondary time frame, we have turned bullish on Nifty, right? What are the other support and resistance lines that you can draw? Okay. So for that, you need to look at some of the important swing high or swing low. Okay. Look here. This was the last swing high here, right? This point on 3rd of June. Now this point has been crossed 16.7, the exact value is 793, 16.793. The value 16.793 would act if it starts falling. If it starts falling, this could act as a good resistance here on Nifty. Okay. The second thing is you see a gap here, like there was a daily thing. It will become more, clear once I show you on the hourly time frame. So I'm just moving to hourly time frame to show you the concept of, how we can have the support and the resistance identified. For example, the other resistance is going to come here, just to take an example. Okay. Somewhere here, we are going to face a resistance. Okay. So tomorrow, keep a watch on 312 level, 312 level tomorrow. If we cross this, if we cross 312 tomorrow or day after tomorrow, we may see an upside, but there are chances that we may stop here and see a resistance, and then we may trace back. This was the breakout point. So we may reach up to 300, 312, and then we may see a 400-point fall. Obviously, it will not be a 400 sudden fall, but it can come back to 785. And if it takes support from there and moves again, then the chances of breaking this particular resistance on its way back would be higher. So essentially what I'm saying is that watch out the price action on the next 2 days. We may go here and trace back, retest our breakout point, something here, and then we may again, if you see a bullish candle, then this time we may create this kind of structure. Okay, so this anticipation is very much possible. You hit this resistance, pause or fall down, somewhere close you come, and then you make a push to break this particular 17,300 level and go all the way to 17,700, 17,650. So keep in mind 2 levels, right? 17 on the upside, 17,300 is one level, 17,650 to 700 is another level. Nifty might see a resistance at 17,300, 320, that kind of level. Come back to retest the breakout, which was 16,800. So it can trace back till 16,800, and then it can go up and test this resistance trend line which I had drawn before. Hope it is clear. Any feedback? Any quick comments? Are you guys there?
Yes, Dheeraj,
yes,
we're all there. Yes.
Yeah, we are here.
This is one. This is one positive. This is one possibility. If you see Nifty going below this, breaking, then also there are support at 16,450. All these gaps will form a support. Let me quickly show you the hourly time frame for that gap. So just 1 second. Let me just clean up the drawings. Okay. Now, the third concept which I wanted to talk to you was about gap. As you can see, Nifty has been running like, it has been sprinting in the last few days. So whenever you sprint, you need to pause, right? You need to calm down. You can't keep on sprinting. And that is what happens with the market also, right? So
it's more of hurdles, Dheeraj. They are jumping actually from one day to another day.
So you see this, there is a gap here. There is a gap between these 2 levels, right? Then I can have a gap. So just do one thing. As a daily practice, you should look at the hourly chart or the daily chart and draw these lines. And when you are playing intraday, keep these lines on your chart and see what is the price action there. What is happening? What is Nifty doing? Okay. So tomorrow, for example, if let's say Nifty opens somewhere flat, okay, somewhere in this range, you can see there has been some consolidation on the hourly time frame. There is some consolidation on the hourly time frame, right? Assume that Nifty is opening somewhere here, okay? And in the 15-minute, if you see a negative candle, the very high chances that Nifty can come back all the way to 930, 940 level, right? So there is a 150, 200 point fall possible. I had drawn the resistance line at 300. So if it is opening gap up, it can go all the way to 300, and you have to watch the price action at 300. Be very careful what is happening at 300, right? After that, Nifty may come back. All these levels which I'm drawing, I can share, I can probably take a screen grab and share it. So 760, 640, all these are very important levels, and each of these levels on Nifty on the downside, whenever the downtrend starts, are going to act as important support. They're going to act as important support. So as a homework, you can do the same thing with the bank Nifty. First look at the candle structure that I talked about, which is it making higher high, higher low, and close higher than the previous high? If that trend continues, that means that we are on an uptrend. Draw the trend line, see, what is the price action there? Is it again taking a resistance and falling back? Then it can again come back and follow the pattern which we saw. And while coming down or while going up, all these gaps, there is a bigger reason why these gaps work and the gaps get filled. All the gaps don't get filled, but majority of the gaps get filled. Okay. So at least on the way up, you can see there is a gap here. There is a possibility that Nifty may come down, not immediately, but in the next few weeks or so, to this 16,350, 400 level. That fall is very much possible. And on the upside, we are talking about 17,700 being a strong resistance. If Nifty breaks 17,700, goes and stays there for a few days, then the primary trend will be nullified. Okay. So watch out for 17,800, 17,750 level. See what is happening there. Is Nifty crossing that and staying there for a few days? Then probably you can be very sure worse is over. If not, all the levels which I'm saying, Nifty can fall. And on the larger trend line, whichever I was showing you, right? On a let's say weekly trend line, we can, you never know, right? Here, all these things, it seemed like we are bullish, fell down. We are right now bullish, it may come down. Okay. The other aspect, whether it will retest 15,200 and all, is more like a wave theory. There are still jury out, maybe some other day. So that's all pretty much I wanted to share. I hope it was useful. I know some of these are basic concepts, but many of us, including me, in the heat of the moment, when we are in front of the screen and we try to trade, we forget the basic concepts and we try to preempt the market, right? We start preempting the market. My only suggestion is don't preempt the market. Market will give you the indication. Market will give you the sign. Once you get the sign, then you flow with that sign. You don't have to preempt the market. If let's say Nifty is going up 300 points, why will you go short? Why not use that 300 point rally from here? I mean, assume that Nifty has to go to 700, 750. Right now, Nifty is at 158, 500 point. It can still go up. Why will you not use that 500 point and then you go short? Why will you preempt right now and go short? Unless you get a candle, unless you get a signal that we are reversing the trend. Great. Thank you so much.
Okay. So Dheeraj, sorry, Sujit here. So yes, what you are saying is from a monthly chart perspective, we are seeing a trend reversal, which is a bullish sign, right? And the weekly daily chart, you are seeing there is a trend line on the top, which can be a resistance, which can bounce backwards on a short term or a mid to short term. That's what you're saying, right? And if those resistance break at the bottom trend line or the channel which you have done, there is a potentially come down. If the channel breaks up, there is a potential to go up, right? That's the way I read this. Yes. Am I right in saying that?
Yeah. So if August closing is also following the same higher high, higher low and close above July high, then you're very sure that the trend has reversed and now we are no longer in the bearish market, right? But whatever you hear, so wait for that August end. And in between, we are looking at the weekly chart. On a weekly chart right now, still the trend